Hello and welcome to an FXTimes video market update. I'm your fundamental market analyst, Nick Nassad. Today is Monday, April 12th, 2010, and it's around 11:30 a.m. Eastern. The markets were waiting for an announcement from EU leaders about a possible bailout of Greece, as we had continuing pressure on Greek bonds last week that pushed Greek yields up very high, and yesterday we had European governments come together to offer Greece a rescue package worth as much as 45 billion euros at below market interest rates. 30 billion euros of that would come from EU nations at a loan rate of around 5%, while 15 billion would come from the IMF, where their interest rate would be around 3.5% if using the standard IMF calculations. Greek stocks and bonds rallied on the news, and the euro gained also. What happens now will be a matter of how bond investors respond to the details, as so far Greece has not activated their loans and they remain on standby. Greece plans to offer 1.2 billion euros of both 6-month and 1-year notes tomorrow, and we'll see how investors respond and whether they bid up the yields or if yields will narrow compared to the wide spreads we saw last week. So far, the reaction has been positive, as the yield premium investors demand to hold Greek 10-year debt instead of the benchmark German bonds dropped 67 basis points to 331 basis points, plus credit default swaps on Greek sovereign debt tumbled 69 points to 357, the largest single drop ever. So we have our main test tomorrow as Greece goes to auction with some of its very short-term notes, but we also, with the more major test, maybe when Greece tries to sell 5 billion and 10 billion worth of bonds aimed at US investors around in a roadshow that is to start on April 20th. If we take a look at the euro-dollar pair, we see that the reaction was very strong, coming right after the weekend, as we had a gap over the weekend of about 160 pips as we move from around 1.35 to open at around 1.3650. We rallied slightly further than that up to 1.3690, but then we slid as traders began to close the gap until we hit support at 1.3565. That support goes back to an important line at around 3560, which had acted as support back in the early March here. Then it turned to resistance in late March and at the beginning of February. And now we come close to retesting that level as our support. So if this holds, we have a chance for the euro to rally further on the news, perhaps reaching this very important 1.38 resistance level, which was our resistance for this sideways consolidation throughout February and March. So we did seem to create a double bottom pattern. Let me just move these around a little bit. Right, so we had the two lows at 1.33, 1.3250, and we've broken above what would be the top for this pattern, double bottom pattern, in the gap open. So you can see that there was a lot of short covering of this pair over the weekend, as we have seen the euro slide sharply from around 1.45 in the middle of January, and even further if we go all the way back to December. So we'll see how the markets react. We're still in a bit of flux, but we should look for some support levels either here at 1.3560, which we've seen so far, or perhaps a little bit further down around the 1.35 level if we go back to our close from Friday's session. We also see, if we draw a short-term downward sloping resistance level, that we broke that in the gapped open as well. So we have this major horizontal support and this downward sloping support as well. A quick look at some other euro crosses. Here we have the euro pound. We had seen the pound gaining from around the 0.90 level in the last 2 weeks until we reached low at 0.87. And today, after gapping higher, we tested resistance at around just above the 38.2% level of this downswing. Here too, we broke a short-term trend line just at the open. So we'll see if we have a further corrective move in the rest of this week, perhaps to 61.8 at the 0.89 level. If we take a look at the Australian dollar versus the US dollar, we saw that the Aussie slid in today's trading. And if we take a look at the Euro Australian dollar, we could see that we had a very big buy orders here, as we did with the euro dollar, as we had short covering of this pair. So that may have affected the Aussie in against the greenback and other crosses. We can see that the euro has had a very strong reaction to the Greek standby loan announcement over the weekend. So that will do it for this market update. I'll be back later today with a full daily recap of today's action. For more news, videos, and analysis, please visit our site fxtimes.com.